Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about this morning is the equity markets. And the equity markets that have been in a tight trading range do appear to be weakening a little bit more. You know, we talked about the other week how NASDAQ and growth stocks were still holding up. And however, last week, the NASDAQ got hit pretty hard. The NASDAQ fell 1.7% for the week. And we had a strong opening last week, and then Wednesday looked like a little bit of a stall day where a greater volume that closed at the lower end of its range. Then Thursday, there was a very sharp sell-off across all sectors. Some of the top biotech stocks getting hit, and other technology stocks falling as well. And Friday, market was okay. You know, came off its lows. However, no volume there, so there was no conviction of buying. Now this morning, we're having a pretty big rally. We'll see how that holds up. Dow's up about 170 points. NASDAQ's up about 50 points, and the S&P's up about 20 points. But taking a look at the indexes kind of tells us a little bit more what's going on. Like I said, the NASDAQ got hit 1.7% last week, closed below its 50-day moving average. Now the S&P 500, the S&P Small Cap 600, and the S&P Mid Cap 400, they fell down all the way to 200-day moving average, but it did catch some support there. So that's the kind of market we're in. The market doesn't make much headway. It falls but catches support. Now the Dow Jones Industrials well below its 200-day moving average, as are Dow Transports, pretty much in a free fall. We're seeing a little bit of a bounce today, but we'll see how that holds. So generally speaking, getting back to this idea, the NASDAQ was holding up, seems to be weakening. So I'd be a little bit more cautious here, and that's indeed what we're doing, is raising a little bit cash at this time. Until we get a clearer picture of what's going on in the market. We still continue to see the same sectors in the S&P performing well, meaning consumer discretionary, consumer staples, the healthcare sector, and the financials. So that tells us that the market still may be doing okay. And if we look at specific industry groups, the building products is doing pretty good, as are banks. So that again tells us that the market probably won't collapse, but in the near term here, it is weakening up a little bit. Now, if we look at some other things that's a little bit positive for the market, could be the contrarian indicators. Again, the AAII number of bulls is really low. People tend to be more neutral or bearish. We see the same thing with the National Associations of Active Investment Managers. They're pretty much underweight in equities going back to October of last year. And we saw the put-to-call ratio spike a few times last week above the 1.2 level. So that again tells us like the sentiment's negative, market's kind of hanging in there. So not really giving you a clear picture, but this week we're a little bit more cautious, again, because we saw the NASDAQ take that hit. But of course, that may change. So as always, let price and volume be your guide. Keep your eye on general indexes. See what the volume's telling you. We're getting a bounce this morning. Maybe the bounce holds, or maybe it fades. You know, it's Monday, you never know. So as always, let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.